What are the factors that make a startup successful?
People, it's about the uniqueness of the solution to that specific problem and how big is the problem. If you don't have these three things, it is very unlikely that you're going to be successful. The unicorns we've been involved with show that the sooner you bring to your team very experienced people, the better.
Which areas of technology do you expect to offer the most opportunities for startups in the coming years?
The artificial intelligence, the mix between biotech and artificial intelligence, blockchain and Web3. The new interfaces, the new Facebooks, the new Googles are being created right now.
Welcome. My name is Daniel Durlay, and I'm the president of the Global Young Entrepreneur Society. The Global Young Entrepreneur Society is an international organization supporting exceptional young people in achieving their entrepreneurial ambitions. Co-hosting the interview with me today is Louis Swire, director of GYES's UK operations and the editor-in-chief of the Curious Times. Our guest today is Stephan Morais, a co-founder and managing partner of Indico Capital Partners, the largest venture capital firm in Portugal, with over 140 million euros across three funds. After completing his MBA at Harvard Business School, Stephan was appointed as a consultant to the Portuguese government for the privatization of a main state investing conglomerate, IPE, and for the draft of the country's national energy policy. In 2006, Stephan was invited to invest in and lead as CEO Temahome, a major Portuguese furniture design and manufacturing company. Stephan was the first Portuguese person to be named a young global leader by the World Economic Forum. In 2010, Stephan joined Portugal's largest bank, Grupo Caixa Bank, where he was appointed as board member and deputy CEO of a new African investment bank based in Mozambique, BNI. He also served as executive director of Caixa Capital, one of the largest and most international private equity and venture capital operators in Iberia, managing over 90 billion euros in funds. Stephan is an entrepreneurship expert with the Entrepreneurship Center at said business school at the University of Oxford, an advisory board member of global executive search firm Amrop, the president of the Harvard Club of Portugal, and a juror at numerous entrepreneurship and investment awards. We are very pleased to welcome Stephan Morais.
Thank you so much for having me. It's a pleasure to be able to share very, very interesting subject that you are covering here, and a very good initiative. Congratulations.
Thank you, and it's great to have you on. Today, you are the managing partner of Portugal's leading venture capital firm. What is your story? What were the major milestones of your career?
Foremost, I think it was the choice of my original degree, going into a very good university, probably the best engineering university in Portugal. It's like the local MIT called Instituto Superior Técnico. I think that was a very strong base, training for. I did investment banking out of London, and then I did my MBA, and I went to Harvard Business School, and that's actually when I kind of discovered that I wanted to be a venture capitalist one day when I'd grow up. This was at 26. So, sometimes you discover things a little bit later in life. And so this was an important milestone. I subsequently was still, a CEO, a banker again. And then eventually in 2013, I came back to Portugal after having lived in 10 different countries and doing, as entrepreneur, consultant, banker, CEO, and so on, and eventually came back and joined the industry that I actually wanted to join, which was, the venture capital industry. And between 2013 and 17, we were very fortunate to have backed, the Portuguese success stories globally. And this was the track record that actually enabled myself and my partners at Indico to launch our own fund, essentially to raise capital from global institutions and family offices and high net worth individuals. And we were ready to start deploying. And so in 2019, we started investing our first fund. And since then, we have invested in 29 companies, about 36 million euros out of a total of actually 140 million that we have under management right now. And these 29 companies were chosen from a pool of 2,600 that we saw until now. So it's a very, very hard decision-making process, and it's very hard to get hold of our capital. But to give you a sense, that portfolio of 29 companies where we have invested 36 million has now raised in excess of 1.7 billion euros. And in that group, there's 3 unicorns. And so we've been very fortunate that we've been able to back really successful entrepreneurs. So over the last 10 years, myself and my partners have been involved in 7 unicorns in a bit of over a decade. So we're very happy with that. And it's, but things take time. And so I discovered I wanted to be a VC in my mid-20s, and I'm nearing 50, and I'm a VC, and I love what I do.
What skills made you a successful fundraiser?
Look, I think that any entrepreneur, because when you launch your own fund, you're an entrepreneur, you need to have that level of energy, grit, self-confidence, and also commercial skills in terms of being able to talk and to lead and to convince other people that your idea makes sense. And so I don't think it is very different from any other sales process or any other launching your own company. Personality that is self-driven and never gives up. And looking back, sometimes we think we were crazy, right? We were from a fairly small country with no particular history of innovation except 500 years ago when we started globalization. But actually, why would anybody give us money? But the truth is, we had the track record. We had a specific idea and a specific business model, and we would find the best companies from this little part of the world. And also the fact that Portugal, in a sense, is a global country from day one. So we have invested in a lot of Portuguese entrepreneurs that live in the UK, live in Silicon Valley, and many other places in the world. But you need to believe in yourself, believe in your idea, and have the arguments you need to counter all the people that are going to say you're not going to make it. And believe me, there were a lot of people that said, you're crazy, never going to make it. Why would anybody give money to a fund, venture capital, tech in Portugal? Well, here we are, 1.7 billion euros later.
When should entrepreneurs seek venture capital investment as opposed to bootstrapping, borrowing, angel investment, or crowdfunding?
The question you have to ask yourself as an entrepreneur is my idea unique? No one. So who else is solving this problem on a global scale? And why am I doing it 10 times better? If you can't answer that question, you should really not pursue the venture capital route, because VC is only for those exceptional cases where you believe and the market understands that you are unique and you're solving a problem in a way that is, that nobody else has done it. And by the way, it needs to be a big problem. So you can't only rely on having a smart idea and a smart solution for an existing problem. It needs to be a very big problem, because there needs to be a lot of people or a lot of companies that will pay you for the solution. So that's why only 1% of the companies that we see end up getting our commitment in terms of capital, because the vast majority of companies are either not that differentiated or not that scalable globally. So if you're not that kind of company, then you need to probably think of making ends meet every month, which means you have to start selling as quickly as possible to cover for your costs, because nobody else is going to give you capital to grow tremendously fast, or even the banks aren't going to give you money if you have no track record. So essentially you have to start trading or selling something that actually makes a profit. So that puts VC to a side, and to a certain extent borrowing to a side, because to borrow you need to have already some cash flow, and that leaves us with crowdfunding or angel investing. Angel investing is actually normally what VCs want to see before they invest. So The angels also theoretically normally only invest in businesses that can grow very fast, become very successful, and that can become huge exits to compensate for the risk. So essentially, if you're talking with professional angels, they're going to have similar criteria to venture capital, differentiation, a big market, and so on and so forth. And lastly, crowdfunding, I would divide it into two different options. Either you are a B2C business that needs to have a lot of visibility in terms you want to reach the crowd, has potential customers. And so doing crowdfunding might be a way of raising not only funds, but awareness for your product. And so crowdfunding might be a good idea to pursue. Or you want to do crowdfunding, but the investors will want to see, huge growth and differentiation and so on, which again, if you have it, that's fine. You can do crowdfunding or angel and or VC. And if you don't have it, crowdfunding is not an option. So I would actually divide this into two camps. You either have a really differentiated product that you're going to attack the market, the global market with, and you're going to be kind of like a Ronaldo. You're super exceptional and everybody's going to want to throw money at you. Or if you're not Ronaldo, quite frankly, you have to make, you have money. So I think that one of the issues nowadays is that everybody thinks that they can have the funding and the salaries of Ronaldo, but actually perform as a regular football player that needs to sort of pay its bills. And the truth is 99.9% of companies are not Ronaldos, and they should not think of themselves as Ronaldos. And in fact, that's a great business anyway, but you just have to sell. You need to sell whatever you're selling and you need to pay the bills. The confusion between not being so differentiated and at the same time trying to behave as if you're Ronaldo is actually not a very good path, because it leads to a lot of disappointment, and you're not going to be able to raise venture capital if you're not Ronaldo or Messi or something like that in terms of being a startup.
What do you look for in the founders of a startup when considering investing?
Well, you're looking for what Ronaldo represents, which is energy, a limitless amount of energy, a super professional way of doing everything, commitment, unwavering commitment with the energy, the passion, the skill, and also the capacity to withstand shocks. Not everything is, things are not going to go well all the time. There'll be lots of difficulties. There'll be lots of sacrifice. The possibility of success is slim, and need to have the sort of personality that overcomes that with a lot of hard work, a lot of leadership capacity, and inspiration. So essentially, we need to be a really special type of personality to actually be able to overcome all these difficulties and triumph. And even if you have that, it might not work out, because there's always an element of luck.
If you have what it takes, what are the benefits of venture capital?
That's a very important question, because venture capital is like the fuel that allows you to go much, much faster. If you have an idea, you need speed and you need capacity to execute. By speed, I mean you don't have the money, you cannot hire the right people to actually make things happen. So you need to be able to get all that fuel to go and hire all these amazing people that will make your product unbeatable in the global scale. And then you need to have capacity, in addition to the people, to actually reach those people. So sometimes to reach that distribution capacity, that could be digital marketing capacity or partnerships, or just reaching out to your customers, you need money, essentially. If you do not have venture capital, it might take you forever, because you're going to be relying essentially on the cash flow generating in your business, which might take years. Meanwhile, another competitor comes in with more money and either does something better or at least the same, but they have more money, they'll hire the right people and get things done faster. So VC is absolutely fundamental as a tool, a financing tool, to actually get things done better and faster than anybody else. And then there's something else. VCs theoretically don't provide you only with capital. They provide you with advice, with comparables. They've done it for a long time. They've seen the mistakes, what to do and what not to do. And so if you have the right type of money, the right VC, you're actually going to go faster, not only because of the money, because of because they've seen it many other times. That's why normally VC funds, the ones that are successful, tend to continue to be successful and have performance that is way better than everybody else, all the other VCs that actually tend to disappear. It's a winner takes all type of market. It's, again, if you are Liverpool or Bayern Munich or Barcelona or Real Madrid, you tend to have great teams. You tend to overperform. You attract more money, more better players, and you tend to overperform again. So it's like football. It's always the same clubs that have the best players, and they'll have the titles, and they'll propagate their success for the future this way.
Based on your experience advising startups, what are the factors that make a startup successful?
I think what really makes successful are the people that are leading it. That those types of personalities which are leaders and are able to attract capital and smart people around them to make things happen. That's the most important thing. But of course, you need to have the idea that is unique and that solves a problem in a unique way, much better than anything else out there in the whole wide world. And that problem must be big. So essentially, it's about people. It's about the uniqueness of the solution to that specific problem and how big is the problem. If you don't have these three things, it is very unlikely that you're going to be successful. And that's what we look for in a team and in a startup when we have that first or when we look at a pitch deck.
Which areas of technology do you expect to offer the most opportunities for startups in the coming years?
There's 3 or 4 areas which we think that are going to be, driving innovation globally. One of them is obviously artificial intelligence. Essentially using data to predict better outcomes and better solutions for whatever problem you have. I think a lot of the decision making that we've been doing as humanity have been based on ideas, opinions, and limited data. And what artificial intelligence does is transform that into actionable data, where actually you have an organized set of numbers and outcomes, and you can derive better conclusions if you have more data that relates a base situation with a desired outcome. So you're going to see increasingly every single business globally using data to try to infer the future, predicting the future, basically. But before, we didn't have the data, we didn't have the systems. Now we have the systems. So you're going to see increasingly, a big interference from artificial intelligence in every single company, every single process. The other area that is obviously very big is blockchain and Web3. It's a revolution that is probably going to change all the software and all the apps and all the interfaces that we know nowadays. It could be on your mobile, on your laptop, and any other sort of wearable that you might have. The idea of decentralized databases where there is not one single controlling entity behind that database is a winning idea, and the force that is moving behind that idea is already manifesting itself, of course, in crypto and in fintechs and in other things, but it will be everywhere. Essentially, we're going to have a huge revolution over the next 10 to 15 years using blockchain technology, and the new interfaces, the new Facebooks, the new Googles are being created right now. This will be a huge transformation in our society. Even if we're talking about systems that are behind the screen, we're basically going to see, the first interactions of apps and consumer-friendly apps coming up, and big giants are starting to appear in that area that can transform who are the biggest companies in the world as we know it right now. Lastly, I would say that in addition to things like space tech or autonomous driving and so on, things are going to happen, but it'll take time and probably not have such a fast impact on people's lives. But they are forces to be reckoned with. But I would say that the other big area is the mix between biotech and artificial intelligence. The discovery of drugs in a much faster way, in a much more efficient way, the personalization of medicine, and everything that comes with it. So increasing longevity, increasing in quality of life, and so on and so forth. That is a very, very big sort of change that we will see in the next few years because of the intersection between artificial intelligence, blockchain, and biotech. So there'll be a huge revolution with marked gains for the productivity of companies, productivity of people, entertainment for sure, but also in terms of healthcare and quality of life for humans will be hugely impacted by these three trends.
What is the ideal founding team composition?
Ideally, there should be a very strong technical capacity in the founding team. So I think that science and engineering are the basis of innovation globally, and of course you want to have the team with probably no more than 2 to 3 founders. Probably not a solo founder is not an ideal situation because it's a very risky proposition from everyone's perspective, and you need people to speak with and to sort of that complement you. And I think that the complement to the engineering or the science capacity has to do with sales capacity, has to do with business management, with marketing, with sales, and with basic leadership skills. So it's important to have 2 to 3 founders that can be complementary and that can work well with each other and have a good relationship, have similar values in terms of the values that they conduct their lives, and have similar levels of ambition as well.
When a startup comes to you for investment, do you want them to have just the core team, or do you want them to have their entire staff sorted out?
They'll never have their entire team sorted out because that could be thousands of people, right? So it's a process. It's a little ladder, right? Step by step, or actually a very long ladder, very, very tall ladder. And so for us, it doesn't matter. It depends on at which stage the company is. If it's just the 3 founders, it's at the beginning of the ladder, and they have to sort of make sure that there's a product and there's some clients. And later on, if we invest in later on opportunities where the company already has significant revenues and so on, they're supposed to have a more senior team. One thing is for sure, the unicorns we've been involved with, and there are studies about this on a wider scale, show that the sooner you bring to your team very experienced people, the better. So startups are not only composed of very young people or very old people. It's obviously a mix of skills, but in general, for them to grow fast, you need to have senior members of the team with lots of years of experience in their specific responsibilities and sectors, and they can bring, they can boost the success of the company very fast. So on average, unicorns have senior leadership teams in their 30s, 40s, and 50s, which makes sense because these are people that have seen it and that have the drive to avoid mistakes and to get things done faster. But a mix of ages and a mix of skills is absolutely fundamental.
At what stage of their careers are founders most likely to become successful?
Mix of everybody. I mean, normally be in there from their early 20s to their late 40s, normally. But again, what we've seen is that as long as these founders surround themselves with experienced people in their 30s, 40s, and 50s, things will go well. If they don't have that mix of ages, it becomes difficult. Also, the older entrepreneurs need younger people because they'll have different types of skills and different types of experience, and quite often, more advanced skills in digital and other newer technologies that, if you're in your 40s and 50s, you might not have the same skills. You have other skills and other experience. So it's a mix of everything.
Which business books that had a major influence on you would you recommend for young entrepreneurs?
There's some classic entrepreneurship books that I think, and even management books that I think are very important. I mean, classic books like, for example, Richard Branson's Lose My Virginity is a very good entrepreneurship book. It was written in the 90s, but it tells you the story of Richard Branson. He's an amazing entrepreneur, not a tech entrepreneur, but an entrepreneur. And it shows you the type of skills you need to have. There's other books which are more like 0 to 1, for example, and also very successful in the digital age in many areas. And I'd say a very good book about venture capital, which I think entrepreneurs that want to raise capital need to read, and it is a book called Venture Deals. So Venture Deals from Brad Felt is an amazing book for aspiring entrepreneurs that want to raise venture capital, because essentially if you do not understand how the deals work and how VCs think, it's going to be a difficult conversation. So you need to go into those meetings already knowledge of how VCs think. So it's a good book as well.
Who would you recommend becoming a venture capitalist to?
I think that VC is a profession that has room for different types of skills as well. I think that if you are a successful entrepreneur and you've done it for a decade or so, I think you are probably ready to, add value to the VC screening and evaluation and advising business, which is basically you have to understand whether ideas are good. You need to advise these companies. You need to help them. I think if you are an entrepreneur with at least a decade of successful experience, I think you're in a good position to join the industry. But I also think that if you have done management consulting or investment banking, you also have a very important role in the industry, because a lot of fund management and venture capital it's in the financial industry. So if you have a good perception of mergers and acquisitions and other types of transactions, you have a lot to add to VC, because ultimately this is a financial profession. And for the same reasons, if you've been a consultant, where you have learned to think strategically, analyze markets, analyze opportunities, recommend different courses of action, I think you can add a lot of value as a VC. So it doesn't have to be that you are a tech entrepreneur and you are therefore you are a VC. In fact, within a VC firm, you need all those types of skills. And if you've been a manager, a CEO, you will also add a lot of value, even if you're not an entrepreneur yourself. So it's a type of business where you need to have all those skills around the table. But of course, you need to understand technology, and at least one of the elements of the team should have an entrepreneurial background, a strong entrepreneurial background that can, bring that knowledge of how to grow tech companies to the table.
What do you think about becoming a venture capitalist to start your career?
Good experience, but I'd say you should probably do other things in the meanwhile. At some stage before maybe coming back, because it will be hard to be just a VC if you've never done anything else. I think it might be a good start, and then you probably should step off and then come back in again after you do other things. Ideally, it's not impossible. There's obviously great, examples of people that have done just that, and you obviously specialize. But I think you can add more value if you do several things in the meanwhile.
We have come to the end of today's discussion, which I found very interesting and highly insightful. On behalf of the Global Young Entrepreneur Society, Stephan Morais, thank you very much for speaking with us today.
Thank you. It was a pleasure to be here.